what was your biggest losing day ever in a single day, dollar amount?
Dollar amount on personal account, $28,000. Yeah.
$28,000 in a single day. Oh my goodness.
28 grand.
You really need to get to understanding your numbers, because if you understand your numbers, then you can understand your risk, especially when it comes to playing the prop firm challenge game, especially when it comes to like all this stuff on the risk side. You really need to understand your own trading to be able to understand how you're going to manage your positions. Crypto Prop is officially live for Hydra Funding. All right, it's very, very similar. I just want to run you guys through some of the differences between, Forex and the crypto side. So if you really want to experience what it's like to have like institutional pricing, the Hydra Funding C Trader side really is about as professional as it gets. What's going on, guys? Welcome back to the Hydra Funding Podcast. We are in episode 3, and this episode is being recorded on the 3rd of October, which is the beginning of the month. So we've decided to start this episode off with a little bit of a review of our past month of trading. I think in the previous episode, we talked a little bit about sharing our journeys and stuff like that. We also ended with, I remember what we ended with last episode, which is, we're both trading challenges, and it's the bald head gang versus the long hair gang on this. So we got a little competition going on right now. So we're gonna start this episode off with the juicy stuff, which is digging into both of our P&Ls for the past month, the month of September. And hopefully this is going to be a little bit of an interesting insight, because September was my first full month of only swing trading. I started swing trading in August, but I started maybe like 10 days in, so it wasn't a full month. September was the first full month that I've spent just only 1 hour chart executions, holding trades for anywhere from a day to really a week even. So it'll be really interesting for you guys, hopefully, to see kind of like the differences in statistics, number of trades taken. I'm sure there's going to be, we can dive into the differences a little bit between scalping / day trading and swing trading, especially because for myself, I've come from the swing trading space as well. Yeah. Thank you guys for joining us for episode 3, and I'm gonna kick it off to my co-host, James Bruce, the man himself.
Yeah, sorry, the bald gang. So September was a little bit of a more challenging month. So if you haven't checked me out on my socials and DY out on my socials, I do my monthly reviews and that on my YouTube, on my Twitter. So go give that a follow as well. But where I go more in depth on my trades and that. But let's just go over some of my trades that I did take. So let's just bring this up over here. Right, as you can see, I had a negative month last month. I was down $1,300 compared to my August, where I had a really, really solid August. Here we go, total 31K. Oh, wow. So really, I had one red day in August, literally one red day in August. Come to September, only red. And it was basically from a few undisciplined days. As you can see, I had a big down day here and a big down day here on the Wednesday and then the Friday of last week. Just maybe, taking my personal loss limits for the day, which was 2%. So just undisciplined days, down $1,300 on the month across all my accounts, right? So, trade win percentage, not bad, 65. I think for me, just letting 1 or 2 days get the best of me. So it started off, I was on the road actually traveling from the beginning of September, around about like the 3rd and 4th. I left and I only got back on around the 16th. As you can see, I didn't really trade these other days. I got back on the 16th. And, this is, I think, what I found from the month of September was how important routines are in your trading, right? And this is the reality, I think, that I try to always put out on social media, and I think it should be done, and I think it should be more popular, in my opinion. You can have a great month in August and execute well, and you can come in September and actually lose money, right? I know you probably had the same experiences in your trading as well. We'll get onto your monthly review in a bit too. But, not every single month is going to be a great month where you're just going to make, gang cash. It's not like these guys on Instagram and that are walking next to these Lambos and everything like that. That's just not, can you make a lot of money trading? Yes, 100%. Is it going to be consistent every single month like that? Of course not, because market conditions change. New news happens, that you need to adapt to. Everything in, US elections coming up. So yeah, that was my month of September. So down on the month, $1,300. Profit factor, obviously 0.92. Day win percentage was not bad. The thing that crushed me was my average win to loss at 0.49. I need to get that.
Yeah, I was gonna ask. I was gonna ask you there. For those of you guys that are new to James, myself, maybe this podcast, like this is something that James and I have discussed before on stream and stuff. And James trades a slightly lower risk reward strategy, but has an incredibly high win rate, as you can see, even on a bad month, his win rate's at like 65%, right?
Yeah.
So my question to you here, James, is is a 0.49 average win loss kind of what you're looking for, or just looking at these stats, right? If you're looking at your trade win percentage and your risk reward on the month, how what are you getting from these numbers that you're taking into the month of trading, for the month of October? Do you get any insights from this, or is it kind of like, oh, this was an anomaly, like I'm doing fine?
No, I'm always getting insights from this because I'm trading a discretional style of trading. So I know for a fact that when I'm trading at my best, right, my average win to loss ratio is around 0.75 to 1 R. And my win rate is above, daily win rate. I like looking at daily win rate, right? We can get to this in a bit, but I do like looking at daily win rate and average winning day compared to the average losing day, because I think sometimes from trade to trade, they can vary. I do like, because at the end of the day in trading, it's the win rate coupled with your risk reward ratio is going to give you a positive or negative expectancy value, right? For those listening. So go check that out. But normally when I'm trading at my base, my win rate's about 70% and my RR is between 0.75 and 1. That is what I'm kind of looking at. And this month, I was poor on my bad trading days. I disrespected my max loss limits and went over those. And I think that's something where it's actually cool. We'll speak about some tools that we use in trading to help us. But Traders Connect actually allow you to have a equity protection drawdown on your account, which I've been actually implying since the start of October. Yep.
That's pretty cool. So what exactly is that? Is it like a hard stop on the account and no more trades are being sent through? How does that work?
Yeah. So basically what Traders Connect does is essentially if you there's different settings. The setting that I use is, let's say the master account that I'm using, copying to all the other accounts, is on $100,000. And my max loss for the day, I want it to be 1%. So I'll set a hard stop. If my equity reaches 99,000 at any time during the day, it will close out all my trades and disable the trade copier for the day. And obviously, if it closes out all the trades on the master account, all the slave accounts will be closed as well.
Yeah.
That's something that has helped me a lot, because very rarely do I go down 0.7 or 8% on a day. Let's just say my hard stop was 1%, and I actually end up break even. Most likely you're trading shit and you're seeing the markets wrong that day, and you're probably going to end down even worse, which happened to me last month. And that has helped me with my discipline personally.
Cool. That's definitely something good to know, because I've just started recently using Traders Connect to link up 2 of my accounts. And I was just talking, like, today I kind of got shafted a little bit on news due to spread. We can maybe share my screen over here. I can show the exact trade, where that kind of happened, which is I was short Euro CHF. That trade was running in profits, hadn't gone to my TPs yet, but I had the master account. I didn't have the copy stop loss and take profit. Everything was just market execution. But essentially, once a stop loss got hit on the master account, it then did a market execution on my slave account, and the spreads were huge at that time. So doing like a market close of the position like really shafted me. And I actually, instead of taking a break even, which is where my stop loss was supposed to be, on my slave account, I took like a full risk loss. That was due to spread. It was like big news. It was CPI for the Swiss franc. So it was very big news, big volatility. And so now I'm going to test having the copy take profit and copy stop loss, or maybe just like a copy stop loss on there. Because I'm trading higher time frames, so if the pricing feed differs by a little bit, it's really not the end of the world for me. For someone that's day trading, 2-minute, 5-minute time frames, having a little bit of a difference between the pricing feeds between two brokers can mean a very big difference, right? Whereas like when you're on the higher time frames, it's a lot more relaxed. Like even if it's off by, an entire pip, it's still not that big of a deal for me,
for
right?
swing trading.
For swing trading, where my stop losses could very easily be like 30 pips. I could have a 30 pip stop loss on currencies, even 40, on the more volatile pairs. So, having a 1 pip difference doesn't really at the end isn't going to affect me that much, but on big volatile news events, which, I hold through. So like, we're already talking about the differences between day trading and swing trading, right? Like if I'm day trading, I'm not in a position during these massive, news events. Maybe I'm holding like a very small runner, but I never have a full size, position kind of going into CPI, or it's very, very rare, right? Like, so this position I entered since yesterday, and I've been holding this. I wasn't banking. I know there was news today, but I was just kind of holding through everything. So that's another difference, which is, I've never really kind of like, quote unquote traded news, I guess. And this is one of the things I'm starting to see, like, oh wow, like the spreads can get massive to the point where it even impacts me heavily on the 1 hour time frame, right? So, you start to learn things. Swing trading is relatively new to me. Trade copying is new to me. So anytime you're using new software, anytime you're testing out something different, you're going to have your little like learning curves, just like with the, the trade execution EA that I'm using. Like I just found a bug on it that caused my stop loss to not move to break even. I found another thing where it was like, if I don't execute the trade with my EA, the executions don't work. So for example, if I place a trade on my phone, right, if I'm out and about and I'm not at home, not on my computer, trade alert goes off, I place a trade on my phone, that EA cannot manage that trade. It needs to be placed directly from that EA, and I didn't know, and I just like had the settings set, and all of my take profits got missed on one trade in September, and I was like, wait, why didn't the EA work? And I looked into it. It was like the EA didn't read this position at all because I placed it on MT5 on my phone. So then I learned that about my EA, and I'm like, okay, cool. So I got to make sure I'm executing everything on the computer, if I want that EA to work.
But the new copier that you're using, you can manage stuff from your phone because it's a cloud-based copier, right?
Yeah, the copier works, but I'm talking about the specific EA that I use to enter trades on MetaTrader.
Yes.
Yeah, it reads. So how it works is like it reads the ID of the exact trade that you executed, and then it stores the ID within the EA. And so when you manage your settings in the EA, it knows what trade there is. But if you place the trade on your phone or from another computer, then that never gets logged into the EA, so it can't manage that trade. I don't know if there's a way around it, but it's something new that I've also just kind of like discovered about this, because I've only used this EA for day trading, and I'm always on my computer when I day trade, so I'm never on my phone. I don't place things from different places. Whereas swing trading, I'm kind of on the markets all the time. Like I'm checking stuff, right? It's a little bit different. So there's little things that I'm finding out, and obviously like trading something very, very new, going into new situations. Yeah, it's not efficient. Like today I took a loss where it should have been a break even, but I now have a remedy for that. I understand how the trade copier works, so hopefully next time that's not going to happen if I also copy the profit and stop loss, and just things like this, like the EA bugging out from me placing an order from my phone instead of placing an order directly on the computer. There was a couple situations in the last month, not that many, maybe like I had this one today, and then I had two kind of similar situations happen in September. Ended up taking losses where I really shouldn't have, but you live and you learn.
Before you get into your September, I want to show the guys just these the way you can actually come to look at your stats, and our face is actually hiding it. So let me do this, and I can do that, right? So this is actually like this. So we can do like that. We can pull up. So this is on TradeZilla, guys, and I use this to actually have a look at my statistics. So if you come to the report section over here on your TradeZilla, and this is for my month of September, this overview section over here, you can actually look at your best trades by time, by trade duration, by instrument, everything like that. This is just the overview section. You can come in depth ones over here down the left-hand side. What I like to do is look at the overview, and you can see my winning days. I had 9 winning days in September and 4 losing days. So not my best statistics. Normally my winning days are a lot, probably actually above 70%, as I mentioned. But here we go. Here's the interesting part. Look here. My average winning day was $1,300 and my average losing day was $3,400. That's just poor from my side. My max losing day should be around about 1%, which across this capital, maybe, all of these accounts, maybe $2,000. I shouldn't be having bigger losing days than that. If I do, it's just not good enough. Right. So that you can really tell from these statistics on TradeZella. Looking at your report section actually helps you see where you need to improve. So my improvement for going into October was having that max loss per day set at 1%. I don't have all my accounts set on TradeZella. Like I've only got my personal and some of my funded. I don't have all the challenge accounts on here because that's not live capital. Yeah, that was my September. So I'm interested to see your September as well, Tiwa. Pull that up.
Yeah, absolutely. Let's dig into it. So we'll go into my September. Let me pull that up if we can see it. As you can see, way fewer trades than James. And the one number that really sticks out to me here is the 14 break evens. This was this was interesting. A few of them are non-trades. A few of them was like testing out 0.1 lots for the trade copier, the EA, stuff like that. So I think maybe let's just say 4 of those trades were just non-trades. They were just, testing stuff. But still 10 break evens is pretty, pretty high. I do take a good amount of break even. So from my back testing of my swing trading strategy that I'm currently trading now, about 20% of trades get stopped out of break even. So I'm kind of used to seeing that. But this has been an interesting month because, started off just on this streak, right? Like break even, gray days are break even. So I had break evens and then losses, break evens and losses. And pretty much I didn't trade on the first week of September because I was in Singapore and coming back to Bali. And then I started trading on the 9th. For the first 2 weeks, I didn't see a single green day, right? It was just 2 weeks of holding trades, getting stopped out back at break even, and then we had this kind of like a breakthrough week at the end of the month where the winners started to come in. And that's a thing with the way that I trade is because if you take a look here, the average win loss over here is at 2.18.
Brilliant.
And I'm actually used to seeing that number up closer to 2.5, but I probably hover at around 2.25 as my average. And so for me, when you have outsized risk to reward, which is kind of how I personally like to trade, my win rates are never going to be as high as James because I hold trades for longer. Like I let trades run to 1RR and then they come back and they stop me out of break even. At 1RR, I only move my stop to break even. I don't even take profit, right? So that's how I trade. At 1R, all my stops always get moved to break even, and I start taking profit after 2RR, depending on the trade, depending on how it goes. But it's my first take profit's always 2RR or after. So that results in a much higher, a much higher reward. But also, I'm used to seeing my win rate closer to 40%. Right, so 45 is right around where I'm happy to see it. I'll have months where it could be 40 or even below 40 if I'm having a losing month. And months where it's really good, I could be up closer to 50. Right, so that's kind of like the balance that you play with. I don't really expect to there is no part of me that expects to see a 65-75% win rate after trading the strategy
that's a brilliant risk reward when you're trading for that high of a risk reward ratio. This is so for you guys listening, I want to bring up an equity simulator. Sorry to butt in, Diwa. I want to show the guys
please, I love this.
There's so many different ways to actually make money trading, and I like that. Well, what about DY? He trades what he believes in. You always have to trade what you believe in. If you believe in trading for a higher risk reward ratio, well, then you can't expect a higher win rate. If you're trading for a lower risk reward ratio, you can't expect a higher a lower win rate. You got to trade with a higher win rate, right? And it's like that give and take. I was actually watching a few. Like the reason why I love trading for a lower risk reward ratio, I believe, if you're a day trader, right? I think a lower risk reward ratio strategy would work. If you're a swing trader, the moves happen over longer periods of time. You can trade with a little bit wider stop losses and go for those like 300-400 point moves on an index or currency pair with a little bit of a wider stop loss. So I want to bring up a equity simulator. So you ended down up on the month. I was down on the month. Really,
I was fully prepared for a down month, bro. Like by the time the 23rd rolled around, right? Like it was starting my third week. I started that day off with a loss. And I was like, man, when is this going to end? And then the wins just started coming, and I was like, okay, cool. Like we might have a shot. And yeah, like you just don't know, man. You just don't know when the winners are going to come, especially for me, because I'm a little bit more systematic. There is discretion in my trading, like with my entries. I don't, I kind of choose where to enter, and I don't take every single setup that that meets the criteria. There is discretion involved.
So this is an equity simulator. I do like using. So if you start with $100,000 at a win rate of 45% with an RR of 2.15, which was your RR, right? Over 100 trades and 100 different simulations and risking 1%, you're going to end up on average 42K. So 42% on $100,000, which is brilliant over 100 trades. And that's risking, with a win rate of 45 and a 2.15. Now, let's just show my win rate and strategy from this past month is not a winning. That's not going to win. But my normal win rate is about 75%, 70%, call it with a 0.8. This is even less than a one-to-one risk reward ratio. If you run that simulation, look at that. You're still going to make money. On average, you're going to make $34,000 over the 100 trades. So to explain that to people, it's like you can't argue with math. So I just wanted to come and show that there's different. So go in Equity Simulator. I found this one. Go use the different ones as well. There's plenty. Go plug them in. And go see.
I love this, bro. I absolutely love this because this type of Monte Carlo simulator is something that we used to run a lot to understand numbers when I was playing poker full time. And another thing that I really want to share with you guys is a risk of ruin calculator. So I really like this, and I think this is massively underrated and not talked about enough. So I think this calculator I use quite a lot, just to illustrate to people like, hey, you need to understand how to actually control your risk, right, James? Maybe if we could just put my screen on here so I could.
Let's go like that.
So, for example, if you take a look at these stats, right, let's just put this side to side right now. Let's say, if my trade win rate was 45.
We got us on the left-hand side now, Do I can see both screens.
Oh, nice. We've swapped sides. 45% win rate, average win-loss, let's say 2.18, right? Risk per trade. Let's say I'm taking 0.5 trades, and for a challenge, let's say the max drawdown is 9%, right? Like on the 2-phase is 9%. You could simulate this and you could see what your risk of ruin is based on these numbers. So what the risk of ruin is the chance of you hitting the 9% max drawdown from the initial balance. And then the peak to valley drawdown is over the course of 100 trades, how likely is it for you to experience a 9% drawdown from your equity high? Right? So there's two different numbers, and now it's not showing very clearly, but if I bump this up to 1% risk per trade, right, you'll see that the risk of ruin is 2.6%. So there's a 2.6% chance that within 100 trades with my stats of 45% win rate with a 2.18 RR, there's a 2.6% chance that I breach my challenge, right? So again, that I'm pretty happy with those numbers. I would be happy to risk a 1% risk per trade based on my stats. All right, so let's change something up here, and let's say we're doing 2% risk per trade. You'll see that my risk of ruin goes up to 15.8%. So even though I have a 45% win rate, 2.18 average RR, there's almost a 16% chance that I blow the account if I'm risking 2% per trade. And there's a 95.4% chance that I, during the course of 100 trades, experience a 9% drawdown overall. So the difference between these two is peak to valley means from equity high, right? It doesn't mean that you've breached the 9%. The 9% max drawdown means risk of ruin is like reaching 9% drawdown from the starting balance. So, if you plug in James's win rate, which is, what is it, around 80% is it 80%?
Yeah. I'd say 70, put in 75, 70%, put in 70% at a
Okay, so we'll do 70 and 0.8, right?
0.9.
0.9. So let's do this, and then we'll go to like 1% risk per trade. So you'll see that if he was risking 1% per trade, he's never going to blow an account, or very unlikely to blow an account that has 9% max drawdown, right? And that's a two phase. But what if we change it to a 6% max drawdown, which is our single phase, right? Still very, very low. What if we increase it to 2% risk?
Yep.
Then things start to get higher, right?
Yep.
These are all the numbers that you can kind of play around with based on your own trading statistics, which is why I think it's so important for every single trader that's aspiring to get better, to maybe get more consistent. You really need to get to understanding your numbers, because if you understand your numbers, then you can understand your risk, especially when it comes to playing the prop firm challenge game, especially when it comes to like all this stuff on the risk side. You really need to understand your own trading to be able to understand how you're going to manage your positions. If you're not collecting data, at least by back testing, you should at least be collecting data on your forward testing, which is why I do love TradeZella. This one thing that I've been messing around with has been the playbook. So the playbook is essentially a way that you can, create different plays that you take. Maybe you take some longs off VWAP or whatever it is, breakouts, whatever are some common trades that you take. You can go ahead and select that, and then you can go and tag your trades as a certain play, and then it'll come out with the statistics. I only trade one strategy. Like, I'm on the higher time frames. I don't really have the playbook. I literally just have one thing, and this was the playbook for the past month, right? Because I said last month I had some that were like mistakes that were not attributed to strategy, right? We have to take those out because it was like technical errors and not the strategy. So
sure,
trades that were break even that ended up losing need to be taken out. So from a purely strategical standpoint, this is not the real P&L, but this is every single trade that was executed exactly according to this play over 14 trades has this, 55.56% win rate, which is very, very high for me. I'm really expecting between 40 to 45. So I'll know that like last month, this win rate was, pretty high, and I'm probably not expecting this. I understand that this was a good month. Average winner 2.22, average loser 575 over here, so 1.03, right? So understanding, having these numbers, being able to track your executed trades, I really, really like TradeZella for this. I think that this software is fantastic, and if you are looking for something to track your daily trading, your monthly results, I think this is something that you can do without it, but I think this makes life so much easier and so much better because it automates everything. And I'm able to come in, refine my data. Like, obviously all the random like executions are not in here. The mistakes, from tech are not in here, right? So I really start to collect data on all this and get an understanding. I have back tested data for, 70 to 80 trades on this strategy before I brought it to live market. Because I wanted to start swing trading. I basically changed up my day trading strategy just a little bit. I made some tweaks and then ran back tests on it and then took it to live market. So currently, we're testing this out. So from the month of, let's say, for overall, this is actually everything. Yeah. So all the trades that I've tagged were at 37.5% win rate over 25 trades. You'll see that the average winner and the average loser is right along where I want it to be. And I'm expecting that win rate overall to be at about 40 to 45%, ideally closer to 45%. So, 25 trades is not a very large sample size. That's the thing about swing trading. Another thing about swing trading is it's going to take you longer to collect data. Like 25 trades for a day trader could be a week, right? This or even a day, exactly. I started collecting this data on the 7th of August, right? It's now October and I have 25 trades worth of data. So understanding the difference, and I understand that I haven't been fully trading. September was a really good month because I was really focused and I got a bunch of trades in. I think in October I should be able to get around 30 trades of data, but that's probably 2 or 3 days worth for James, right? That's probably 2 or 3 days.
Yeah, when you are day trading and scalping, you're gonna get a lot more data a lot more quickly. That's for sure.
Yeah. So
No,
yeah,
really solid. You are.
that's
This
a
is
question
solid.
I have for you, James. Question,
Yeah.
actually. What is a kind of sample size number that, you would say, hey, this is a good gauge. Like, I think this data sample is reliable for me, right? For me, I want to see upwards of 50 minimum, like 50 being the minimum for me to say, hey, like I like these numbers. For me right now at 25, like I don't even care
Yeah.
about these numbers, because one win or one loss can change a lot of the data, like just
course.
by itself. It has too much impact, right? Whereas if you're in the 50 to 100 trades region, 100 I would say is solid. Like 100 is a very solid sample size. You can extrapolate that data, especially for swing trading, because if you're swing trading, that 100 trades would have been through multiple various market conditions, whereas maybe 100 day trades, it could have been all in one type of market condition, right? So I would love to know your thoughts
Yeah.
on sample size, James.
100%. I think for me, I like 100, right? So I always actually have a thing, DY, where I come into each and every single week with a specific work on. But I would say for my date, in terms of a specific number, I like a data size of 100. In terms of day trading, I do like looking at things from month to month. So, for example, at the end of September, I'll be like, this is what I did poorly in September. I have this as my maximum focus, ultimate focus for the month of October, right? So for October, so it's called like a work on. I call it like a work on, right? Because I know from a swing trading perspective, you're going to take longer to get a data size, 100%, because you're taking less trades. From a day trading perspective, from month to month, I always have a work on. My work on for this month is getting my average winning day similar to my average losing day. And by how I'm doing that is having that equity protection in Traders Connect, the trade copier that allows.
It's almost like your hard stop, right? It's your
Yeah,
hard daily stop.
Correct. Because if
I love
I
that.
respect that hard stop and not be an idiot, I actually can keep my losing days pretty, because there's going to be losing days, bro. But sometimes, for me, I'm quite a competitive person. I hate losing, bro. So when you're down on the day, guess what? You want to push, you're going to take crappier setups, end the day down even worse. So I've got that hard stop on my equity protection now. But in terms of a data set, I would say for day traders, a month is a good enough for me, because I'm normally taking about 70 trades in that month as well. Like I could be taking 2-3 trades a day. That could be times 25 20 trading days. That's over 50 trades. So I always have that work on I like a month to month work on specifically. Yep.
Yeah, it's pretty interesting, because even across data collection, day trading and swing trading is quite different, right? Because when I'm swing trading, I'm watching so many multiple markets, and all of these markets are in different conditions, right? Some markets are bearish, some markets are bullish, some markets are consolidating. Like there's all kinds of stuff going on. So even though I'm getting a smaller number of trades, I feel like because of all the different markets that it's spread across, that I'm actually getting a variety of market conditions. Whereas for maybe day trading, if you're just watching, 1 or 2 or 3 types of markets, a lot of times it's just going to be one directional for quite a while, especially for something like an index, right? Like it's just going to be bullish for forever. And then maybe you're going to have a pullback bear market, but it could last for months even. So yeah, just a lot of interesting differences. Actually, I want to ask you an interesting question. I don't believe I've ever asked you this before, James.
Sure.
What was your biggest losing day ever in a single day, dollar amount?
Dollar amount on personal account, $28,000. Yeah.
$28,000 in a single day. Oh my goodness.
28 grand.
How
Just
how
shy
was
of
that
30.
day for you? Was it like an over trading? Like how did you end up, creating this kind of like a massive hole? And how did you then approach kind of getting out of it? Did you have new rules set for yourself? Because I think a lot of traders actually go through this. Some of you guys might have just experienced your worst trading day ever. So how did you approach this?
Yeah. So it wasn't actually technically my fault, right? So what happened was, I think I did mention this in episode 1, where I entered a position and I thought I entered, let's just say, I think it was like 1% risk. And I was trading with about $200,000 at that time in a personal trading account. And I entered 1% risk. So I thought I went to get something to eat, came back and I'm like, oh, I've been stopped out. okay, cool. Jeez, I've lost $28,000. It was 10% risk or 11%, whatever I put in. It was more than I expected. So obviously, I'll still, everything that I click is my fault. I push the button, I hit that. So I have to take accountability for everything. And that, I think I have spoken about that in episode 1. That's why I do like prop firms, because if that happens on a prop firm, well, I've only really lost, if it was a 200 grand account, maybe $1,000 or whatever it is, right, to cost it. So it was a tough time. I did take a little bit of a break from that. Yeah, I think coming back from that, one thing that I've realized in my trading, and it's the only thing that can actually stop me, is having that hard, like, equity protection, drawdown blockers. I used to actually buy an EA for my account after that, to have like a drawdown blocker for the day. Once I hit this, it's like having, because I think why retail trading is so hard personally is because you've got to be your own tech guy, right? You got to be your own tech guy, fixing your PC if something's wrong, whatever. You got to get your own trading tools, everything like that. That's why I think trading tools are so important, like TradeZilla we've mentioned today, other ones such as Edgeful, all these things, Traders Connect. But you got to be your own tech guy. You've got to be your own risk manager. And then you've also got to be your own psychologist, bro. So that's why retail trading is so tough. Whereas if you add an S&B Capital on-floor trading desk, there's going to be a risk manager that's watching maybe a risk manager per like 2 traders or whatever it is, even maybe individual risk manager. Whereas if you've got $1,000 to play with the capital per day, and you hit that $1,000, they're going to block you out for the day. No matter what you do, you can't get back in. Whereas like we can go adjust that, right? So I think for me, just putting in places, when I had that big trading loss on a specific day, was just putting in protections that it doesn't happen again. So if it happens, an equity blocker will take me out, and we won't see that. It hopefully won't happen again. But I think you got to go through. I was speaking to a few guys that are older than me the other day. You got to go through the shit to have a story. If you don't go through the shit, your story's not exciting. That's why you see on YouTube, you get these videos that say, bank robber turned, poker player. Everyone wants to watch it. Or like ex fraudster turned successful businessman. Everyone wants to watch it because they want to see how he turned his life around. So it's like you got to go through a little bit of shit to have a good story. What is your biggest loss that you've had in a day?
My biggest loss on a personal account, it's not very exciting. I haven't traded very large personal accounts. My biggest loss on personal account is about $1,000. I've actually had quite a good run on my personal accounts. Actually, like it's been quite a good run, minus the degen crypto initial gambling days. That's how I got into trading. There were probably some big losses there, but I was an idiot. Like for me, actually trading and not like, oh, futures. Let me just how many X leverage? Like from my actual when I started taking trading a little bit seriously, about $1,000. But on my challenges, I failed a 500K Hydra Funding challenge, I think beginning of the year.
Sure.
Maybe it was last year. And bro, I'm not proud to admit this, but it was like fully off of tilt. Like it was just there was one mistake. So I had my biggest losing day ever. Like the account was up, I think 2 or 3%. Like I was making very good progress on that account. And in a single day, I lost almost 4%. So I almost breached the daily max. I think it was like above 3%. And it was during this time period when MetaTrader just pulled out. So we had switched everything over. Everyone was just ported over to a different platform. I believe it was DX Trade. And I was like, a new platform. I had no idea what, the loss really wasn't like technically my fault. It wasn't like due to me making like a judgment error. It was a technical error. So I was trying to be smart, right? Like, cause it didn't have like partial take profit. So I was like, oh, what if I just set a limit order for my take profit and then I just manage things that way? But what had happened was like this position had gotten closed out at break even, stopped out at break even, and I forgot to cancel my limit order, and I just completely forgot about it. So my limit order was just still sitting there. And I didn't check the account for like a day, right? Like it, I just saw that I stopped out at break even. I kind of forgot. Next day I went, did my stuff, and I come back in the evening and I see like the account in like with this position in massive drawdown. I was like, what the fuck? What is this? Like, and I looked at it. I was like, oh my God, you idiot. So I'd gone from like maybe up 2 or 3% on the account to like negative, like within one trade.
Yeah.
And,
Man,
And this is why I asked you how you approached it, because like that just destroyed my psychology. Like I
oh,
allowed that to affect me in a way, and I didn't stop myself. Like I just went straight back. I was like, okay, I'm gonna make this back. It's gonna be fine. I went straight back. And I went into this like I'm gonna make it back mode, but like I was definitely fully tilted. Like I was on tilt.
course,
Like I should have
Yeah.
stopped trading for like a week.
And
Like that's what I should have done, but I didn't.
this
And like
this
I
is
ended
why
up just blowing that account that week. I blew that account.
Well, of course, because your psychology is now all over the place. You're like, it's not, yeah, that's exactly. So it's interesting. The thing that had your biggest loss, even though it was on a prop firm, it's the same. You feel shit. It wasn't technically our fault. It was our fault because we set the limit, and
Yeah, I'm the one that put the trade there. I have nobody to blame. Like it wasn't
there's
the
no one to
broker,
blame but
it wasn't
ourselves.
whatever.
But I think this is why I love trading prop firms, bro. Because if I lose an account, I'm not losing $28,000 on a day, which is like a massive kick in the nuts, bro. So yeah, I that's why I personally love prop firms. After that actually happened, DY, that's when I started to cipher more money. Sound like a drug lord. I cipher more money into, like, I used to put it into like retirement accounts and stuff like that, just because of, I'm like, I'll rather just trade with some prop firms, and then if I lose an account, hey, I lose an account. It's not the end of the world. I can go get another one. So yeah. Man, it's tough. It's tough. You full on tilt mode after that, for sure.
Dude, I went full tilt, man. I was just like fully tilted, and I kind of just like started taking more risk than I was supposed to. I was like, no, let me just. You can't go into this like I'm gonna make it back like mindset like that. That was really, really poor decision making. On my end. And there was a part of me that was like, there was a lot going on then, because even for the company, it was like a very like rough period because MetaTrader pulled out. We were transitioning everyone. So there was a lot of work stress as well. It's not an excuse, but like the thing is, like, I should have had the awareness, right? And listen, if you're a trader, like, you need to have the level of self-awareness for you to take a look at your life right now and say, oh shit, like I got family stuff going on. Right, like I got work stuff going on, and I just took this massive hit from trading, which I'm feeling like shit about. Maybe I should step away for a bit, right? Like, let this be like a lesson to you. Like, I'm sharing this story because at the time we were so busy transitioning everyone in Hydra to new platforms. There was a lot of customer service stuff. We were dealing with the MT side, tech provider issues, and it was just full on across the board. And I was in Singapore like at the beginning of the year, which I really didn't like. So there was multiple things that are happening, and this was kind of, I think if this had happened in alone, like in a vacuum, I would have been fine. But with all the external stressors and all that was going on, this was essentially like the straw that broke the camel's back, and kind of like put me on tilt where I was like, no, I just need to make it back. And, I allowed that to happen, right? I didn't have the awareness or the self-control to really be like, hey, let's step away from trading for like a week or two. Like you're not in the best headspace right now. But I didn't do that for myself. And thank God it was a prop firm account, right? Like, who knows how bad it would have been if it was a real money account. I just continued to allow myself to trade that because I wouldn't have gotten stopped out at 6%. I could easily be negative 60% in a month, right? Yep. Like it's very possible to get into this kind of hole. So like it's definitely something that I feel like you need to consider, like finding a way to evaluate your current mental state, maybe evaluating how you're feeling or maybe there's a concise way to kind of figure that out. And I think for me, that was a very hard lesson. And, I feel like so much of this year, especially now swing trading, I am so proud of like where I'm at, like psychology wise, execution wise. I'm executing the best I've ever executed, like just unemotional, systematic, like every single trade I've taken since the beginning of September, I would say every single trade I've taken, I am extremely happy to take and would take again, right? If you can look back at your past month performance and say, hey, like every single trade, I would have done it again, no hesitation. That's the sign. Even if you're in the red, right? Even if you're in the red, like if you have a system or whatever it is you follow, you're like, I managed risk perfectly. Like I didn't oversize, it was a setup that I'm confident in, that I have data on. that's all you can really evaluate yourself on, because sometimes you're going to have winning months, sometimes you're going to have red months, and it's maybe not because you did something wrong. Maybe it was just the distribution of trades that month just didn't give you that many winners. You know, like you need to start looking at things with a little bit more perspective. So yeah, that was like a very interesting lesson for me, and I feel like I've definitely learned from it. So if any of you guys have had some big losing days in recent times, or if any of you guys have had some, you know, tough weeks or months, you know, look at us, right? Like, you keep going, you keep trading, and you keep learning from it. Don't be too hard on yourself, but find ways to make improvements, find ways that you can you know, continue to get better as a trader. Don't let these things get you down.
Yeah, 100%, bro. It can be tough at times, but I think this is what we're trying to do with this podcast, right? Just be open, honest, and we'll go a couple of reviews, speak about. I wanted to go any updates at Hydra at the moment. Any updates on the firm?
Oh yeah, right. We've been talking about. I like where this episode's gone, because we've really, I feel like, gone into stats, gone into like comparing swing trading and day trading, which we've been talking a little bit about, you know, in the past 2 episodes. Yep. Big news at Hydra. All right, like, we've given you some good tea, some good value in the last 47 minutes. So allow me to do some shameless promotion here for a while. Crypto accounts, crypto funded accounts are finally live at hydrafunding.io. So if I can just pull up my screen here real quick. And
I can get it as well.
Crypto Prop is officially live for Hydra Funding. All right, it's very, very similar. I just want to run you guys through some of the differences between, you know, Forex and the crypto side. Now we have, I believe right now we have 26 pairs available to trade. We were originally aiming for like 31, but we had some issues sourcing good liquidity for 5 of the pairs, so we're down to about 26 right now. For us, we're always focused more on quality over quantity. Like, we want to make sure that if we allow you to trade something, that you're not going to get massive slippage, you're not going to get shafted on spread and things like this. You know, we don't want to deal with those complaints, but it's pretty similar. We got the 2-phase, the 1-phase challenge with the crypto plans.
Yep.
Very similar profit targets, right? Very similar max drawdowns. And the main thing I want you guys to look at is we offer 5-to-1 leverage on Bitcoin and ETH, and 2-to-1 on all the other altcoins. On the traditional Hydra Forex account, you're only getting 2-to-1 on Bitcoin and ETH, which you can trade, but the spreads are also much worse. You deal with like rollover hours on the weekends, which no longer happens, right? We started this product with the intention of sourcing native crypto liquidity. We've done that. We're successful at that. These are the same providers that are providing liquidity to the biggest exchanges, the biggest futures trading platforms in crypto. So 24/7 trading comes as standard on these challenges, right? You don't deal with weird things like rollover hours anymore. And we offer much higher leverage. The main difference here is that there's a daily max profit and loss on the both the 2-phase and 1-phase challenges, currently set at 3% equity based. So if your account goes up by 3% in a single day, let's take an example of a $100,000 account, right? If you go up to $103,000 on that day, all your trades will be closed and you can come back and trade again the next trading day. Same thing if you lose $3,000. It's almost like this hard breach, not a hard breach, this like manual stop out. The max loss you can take for that day. It's considered a soft breach. It's not a hard breach. You don't lose your account if you lose 3% in a day, right? There's no more of this like daily.
Is that only on the crypto ones, or is that on the Forex?
Only on the crypto side. We only have this on the crypto side. So if you lose $3,000 on this 100K account, right, your equity reached $97,000, then all your trades are going to get closed and you can come back and you can start again the next trading day. You don't breach your account. There's no daily hard breach anymore. This is just a soft breach on the crypto side. Accounts start from $5,000 to $200,000 on the crypto side, and we have both one phase and two phase plans. Depends on kind of what you like. The main difference between the two, besides the price, is really like there's just two phases. There's two phases for the two phase. Obviously, you have to pass it twice, and then for the one phase is a little bit more expensive. And the second biggest difference is the max drawdown, right? So the one phase only has a 6% max drawdown, whereas the two phase has a 9% max drawdown, which for those of you who like to be a little bit more aggressive, you're going to want to go for that higher drawdown plan. For those of you that don't want to pass twice and don't mind a little bit less drawdown, you can go for the one phase. And like I've said on streams in the past, the one phase is the one with the higher passing rate. That's information that I'm happy to share with you guys. So for those of you that want numbers on your side, go for the one phase plan, risk a little bit smaller. We are seeing much higher passing rates on the one phase than the two phase. If you want to go to the website, we have all our tradable asset pairs listed here. You can trade things like Aave, Sol, XRP, Uni, I believe Ton is on here. Is Telegram on here? Or was that something?
Yeah, I'm really liking this new.
There's Tau.
Website.
There's a lot. There's a good. I really like GMX as a coin as well. CRV. A lot of these altcoins are not being offered on the other platform, and we've kind of chosen the highest liquidity. The highest volume pairs for obvious reasons, right? Like it makes sense for us to start off with offering the highest volume pairs because most people are going to be trading these. So yeah, if you wanted to day trade crypto, if you wanted to get funded being a crypto specialist, now this is completely possible. Account size is up to 200K. You can start off with a test account. We're running everything on DX Trade, so you're going to get stuff like order book depth, all the things that you would associate with a traditional professional trading platform. You are going to get, and you are going to get the best spreads and liquidity available in the prop space as far as crypto trading is. I have no doubt that we have the best product as far as liquidity and spreads go across the crypto prop space. We definitely have. We've worked very hard to source the liquidity and create this product. So that's something I'm very proud of. And we currently are running a 20% off promo on all crypto challenges. So just use the code crypto at checkout if you want to try one of these out. Go test out a 5K challenge. It's $45. Even if you just want to test out the trading environment, see what that's like. Take 20% off of a 5K thing, a 5K challenge, $35 for the two phase. So yeah, hope you guys. I know some of you guys have been waiting for this for quite a while. We're very excited to finally bring this to you, and this product is finally now live. And yeah, I'm very excited. We have been getting a bunch of new traders coming in, looking to trade crypto. I know there's people in the ASFX community as well that are looking to trade crypto, but here it is, guys. Here it is. Enjoy the product. If you have any feedback, please drop in the comments. Write to us on Discord. We have multiple ways of being contacted. So if you have any feedback, or if there's coins you'd like to see, things you want to ask about, go ahead. Let me know.
Yeah, I'm really loving this new website, Diwa, and I've got a couple of challenges running at the moment, and I'm actually thinking of getting 100K. I want to try the two-step, all of them on the one-step. I want to try the two-step challenge too. So I'm thinking of maybe getting that in the next couple of days as well. But I really, really do like, on the copier, something that I've seen is that your executions and that are great. Because what the nice thing about the copier is I got like 10 different, personal accounts, prop firms, everything like that. You can see which executions are executing better at better spreads, because you can see the balance. If you made 1% on your master account, what is the difference on the other account? And your guys' feed, I'm using the C Trader accounts, are really, really solid. I personally do. I see you've got obviously also platform 4 and 5. I do prefer C Trader just personally because I've actually I don't use C Trader. I use MetaTrader as my master account, but with the copying, it's so easy to add the C Trader accounts to the Traders Connect trade copy and everything like that.
Yeah, it is much easier. It's like a click and you kind of add it in. I do like the C Trader side a lot, and I think I've said this also before, right? Like we do offer platform 4, 5 for you to trade on, and I think we're one of the few firms actually that still that are able to offer the MT trading experience. But the spreads are going to be better because there's a difference. Like we're able to offer platform 4 or 5 through a retail broker partner, whereas the C trader side, the DX trade and the match trader side, this is all liquidity that we're aggregating from multiple institutional brokers and market makers. So you're getting institutional spreads, institutional pricing, institutional liquidity. And, like I've done comparisons myself. I have accounts on both sides. And even from a swap fee perspective, you're going to pay way better swaps on, the C trader side of things. Spreads are going to be better. Liquidity is going to be better. But it's you can't expect things to be the same when you trade at a retail broker versus using institutional providers. It's not going to be the same. You can never expect it to be the same. So if you really want to experience what it's like to have like institutional pricing, the Hydra Funding C trader side really is about as professional as it gets. You're getting the best that you can.
I really do like it. So, and the thing I like about, so I actually had someone reach out to me, DY, yesterday. They've obviously seen me on, videos with Hydra and everything like that, my daily reviews and that sort of thing. They've seen the good old bald guy on with the long haired guy.
Team no hair.
So he asked me, James is my, I've been shafted by a few prop firms. I'm in phase 2 now of a Hydra 2-phase account. Am I going to be paid? And I said, Hydra pay, brother. There's no issues with that. Hydra going to pay. They got DY. I've got close connections with DY and obviously Cam at the firm, and DY now close. I mean, you're going to be paid. So there's no issues with regards to that. And what I said to him, what I would like you to do is, they're very open and honest. They've come on my streams. DY's been on my streams. We've on podcasts together. Come and look at the frequently asked questions. Everything that you need is in the section over here. If you don't know what you're looking at, come and look at what the rules are. Come and read them here. And something that I like about you guys is you're very open and honest. And even over here, the live accounts, it says here on the live account, what is the difference between the live and the assessment account? Nothing. It's the exact same. The only difference is that there's no profit target on the live phase, right? So yeah.
So we that back end, that dashboard is also brand new. We've updated everything. There's been a lot of development going on the last 2 months. I've just been telling James, just like, on a personal level, like the last 2 months have been interesting because we've been so deep into like development and, working so hard on bringing out this new product and then also updating our dashboard, like just making sure that everything is correct. There's been a lot of like back and forth. Anytime you do design, anytime you're coming up with something new, there's a lot of work involved on the back end just to bring the product to market, right? Just to bring what you see to your to what we can see today. There was a lot of work going on. So I'm actually really glad to be kind of like completing this quote unquote build phase as we end Q3, right? Going into Q4, we're really going to focus on, doing a lot of marketing stuff, doing more events with you guys. 2-year anniversary for Hydra is coming up. So we're going to have a very, very big trading competition. So stay tuned for that. That's going to get announced at the end of this month. I'm planning to make it our biggest trading competition with the biggest prize pool we've ever done. So there's going to be a big celebration for the 2-year anniversary of Hydra. Hydra's officially 2 years old as of October. So we're going to celebrate that this month with you guys. And we'll keep you guys posted when that new trading competition is out. And it's going to be a lot of fun, guys. But for now, I really hope, the crypto traders out there that have been waiting for us to fund you, you now have a really good crypto product that I can be very, very proud of, that we've worked very hard to deliver. And I hope you guys enjoy trading these new crypto accounts. And keep your eyes peeled for some stuff upcoming. Not gonna say too much, but we have plans for some guests to come on the podcast. Right now that we've gotten 3 episodes under our belt, we're a little bit more used to running this podcast format. We're getting the editing and all this stuff done. I think we're ready to bring on some guests in the next couple episodes, and we're starting to look for some interesting people. So got bigger plans for the podcast as well. So lots of exciting things coming up. I know we said we wanted to discuss quite a few things in this episode, and I don't think we've touched on it, but I think that we can get into them on the next episode, because we've been running for about an hour now. So we're going to go ahead and wrap this podcast up today. Do you have some final words for the Hydra fam, James? You got some golden words of advice here?
Final words is, I always appreciate coming on the podcast with you, DY. I'm looking forward to getting over the line on some of my Hydra funding challenges myself. And if you guys are in some challenges yourself and want to reach out, what I would say is get in the Discord. There's a Discord chat. I'm often in there just checking what's up. So get in the Discord. And I think the biggest thing about trading is don't do it by yourself. It can be quite lonely. Yeah. So reach out. And there's always that Discord with the Hydra family in there. So yeah.
Links in the description. All right. My final words that I'm going to leave you with are Team Long Hair. Let's go. Thanks for joining today's episode, guys. We'll catch you in the next one. See ya.